Good afternoon everyone and welcome to the Morrows Monthly update. My name's Chris Malloy and I'm the Chief Investment Officer for Morrows Private Wealth. My role is primarily around constructing our client portfolios and researching our underlying fund managers. We'll be providing these updates on a monthly basis going forward to give you some background on what's been happening in the markets, recent economic data and also our outlook for the markets and your client portfolios going forward. Global share markets performed strongly in August, with the Australian market up about 2% for the month. We did, however, lag other global markets such as the US, Europe and Japan, which were up between 2 and 4% for the month. The worst performing region was China, down around 4%. Safe haven bond yields rose for the month on the back of the ECB coming out in support to say that they will backstop the system, and this had a result of also reducing Italian and Spanish bond yields. Commodities were up strongly for the month, with oil up around 5% and gold up around 4%. The Aussie dollar was mixed depending on the region, falling about 2% against the US dollar, but we're still seeing strong support by other major central banks for the Aussie dollar. Recent economic data has been mixed depending on the region. We've seen some strong numbers come out in August in the US, although the pace of the recovery is concerning. Housing data picked up, which was good. We've seen some manufacturing numbers come out better than expected and also strong consumer sentiment numbers. In Europe, we've seen them contract 0.2% in the second quarter, although a bright spot was Germany, which rose 0.3% in the second quarter. We've seen 5 straight years of negative growth in Greece now, which is a concern, and we still have concerns for the Europe region as a whole. China is slowing down, but one of the positives in China is they do have very low inflation. Manufacturing is an issue, but the Bank of China has tools which it can stimulate given the low inflation. Domestically, we're seeing a two-speed economy continue. Growth rates in Western Australia are very strong, but on the eastern seaboard they remain quite weak. The RBA in its September meeting kept rates on hold, although with inflation at very low levels, we do know that the RBA has further capacity to cut rates if required. So where does that leave us? Markets remain very volatile and the outlook remains uncertain. We continue to maintain our client portfolios in a de-risked position, protecting downside where we can, but we acknowledge that upside risks still remain. In summary, we are continuing to monitor the markets and we're continuing to look at opportunities to position your portfolio to benefit from those upside markets whilst also protecting the downside. Thanks for your time and we look forward to preparing our next update in October. Thank you.